Hello everyone. Today we're diving into a story that might completely change the way people think about NIO as a company. Most investors and EV fans know NIO mainly for its cars, sleek electric SUVs and sedans that have grabbed headlines across China and now in global markets. But what's really fascinating is that there's an entirely different revenue stream starting to emerge for NIO, one that doesn't depend only on selling cars. And recently, we got some very interesting news. McLaren has actually paid NIO for its technology and consulting. Yes, you heard that right, an iconic performance car brand has cut a check to NIO, and this opens the door to a much bigger story about how NIO might find profitability outside of vehicle deliveries. This is not financial advice. Please do your own research. Let's break it all down. The McLaren deal, NIO's other partnerships, how battery swapping technology could unlock steady income, and why this all paints a very bullish picture for the company's future. So, here's the big headline. In NIO's latest earnings report, their CEO confirmed that McLaren paid them money. The payment was tied to consulting services and technology access, and the chain of events behind this is really interesting. Remember that CYVN, a major investment group from Abu Dhabi, owns a stake in both NIO and McLaren. Through this shared ownership, the partnership between McLaren and NIO became possible. Now, McLaren is reportedly tapping into NIO's expertise not just for advice, but also for actual technology that could enhance its own performance cars. This is not some small side project. These payments represent the start of something that could evolve into much larger licensing deals if McLaren chooses to adopt NIO's technologies in its vehicles. Right now, the revenue shows up as other income for NIO, but even at this early stage, it's already boosting results in a meaningful way. Year over year, NIO's other revenues climbed by 62%, and quarter over quarter, they rose by 37%. That's not a coincidence, that's McLaren money flowing in. The big question is, can NIO become profitable without relying solely on selling cars? Traditionally, carmakers live or die by vehicle sales volumes. But NIO is showing that its technology is valuable enough that other automakers are willing to pay for it. If that trend continues, then yes, NIO could absolutely reach profitability, even if delivery numbers fluctuate. And remember, this is not only about McLaren. NIO already has multiple partnerships lined up with big Chinese automakers like JAC and Chery. These agreements are specifically structured around NIO's battery swapping technology. Once those partner vehicles hit the market, every time a car uses NIO's swapping stations, or every time a license is paid for using the technology, NIO collects revenue. That's recurring income that scales as more automakers join the ecosystem. Let's pause for a moment on battery swapping, because this is a massive piece of the puzzle. A few years ago, NIO signed several partnership agreements with traditional automakers to create vehicles compatible with NIO's swap stations. While it's taken some time for these projects to reach the market, it looks like the wait is almost over. For example, Chery has already tested an SUV that works with NIO's swapping stations, and the launch is expected soon, possibly within the current quarter. If that happens, it's a game changer. Imagine this. Every Chery vehicle sold that can use NIO's swap stations must contribute a small royalty or licensing fee back to NIO. That means NIO will benefit financially from cars it doesn't even manufacture. This is essentially free cash flow that grows as more partner brands sell vehicles. It's like Apple earning revenue every time another company sells a device using its ecosystem. Beyond battery swapping, NIO is also making smart moves in hardware development. Their in-house chips have cut vehicle production costs significantly, about 20,000 RMB, or nearly $5,000 per car. By relying less on NVIDIA and avoiding global chip supply bottlenecks, NIO not only saves money but also gains the ability to potentially sell these chips to other automakers. Think about the implications. If smaller or mid-tier carmakers can't get enough supply from NVIDIA, but NIO is able to offer a competitive alternative, that's yet another revenue stream. And again, it's not tied directly to how many NIO-branded cars roll off the line. Then there's software. Instead of using Android or Linux-based operating systems, NIO has developed its own SkyOS. Because it's self-built, NIO avoids licensing costs and maintains complete control over performance. But beyond cost savings, there's an even bigger opportunity: licensing this software to other companies. SkyOS is designed specifically for vehicles, especially those equipped with AI-driven features. That means ultra-low latency, seamless integration with sensors like LiDAR, and optimized energy efficiency. Competitors often rely on patchwork systems where every component runs separately, which increases delays and energy waste. NIO's integrated approach delivers a smoother experience, and that's something other automakers might be willing to pay for. Another revenue stream to watch is franchising. NIO has started working with partners across different countries to bring its vehicles and services abroad. Even smaller markets, like Costa Rica, are part of this global rollout. While the scale of each market may vary, the key point is that every franchise agreement means additional revenue flowing back to NIO. By the time Q3 and Q4 wrap up, NIO will likely see a significant jump in both car sales to franchise partners and other income streams tied to these agreements. Combine that with payments from McLaren and royalties from partners like Chery, and suddenly profitability in the near term looks far more achievable. Right now, McLaren's payments are limited to consulting and tech support. But think about what happens if McLaren decides to integrate NIO technology directly into its vehicles. That would mean much larger licensing fees down the road. For NIO, that's a dream scenario: high-margin revenue that doesn't require scaling manufacturing lines. And this goes back to the core shift in NIO's identity. The company isn't just an automaker anymore. It's evolving into a technology provider and enterprise that develops hardware, software, and systems that others want to license. Whether it's chips, operating systems, or swapping stations, these are assets that can be monetized in ways traditional car companies can't replicate. So, what does all of this mean? The McLaren payment was more than just a one-off deal. It's a signal that NIO's technology has real value beyond its own cars. Between battery swapping partnerships, chip development, software licensing, and global franchising, NIO is building a business model that could deliver steady, diversified income. The next few quarters, especially Q3 and Q4, will be critical. We'll see whether Chery launches its swap-enabled SUV, whether McLaren expands its use of NIO tech, and how international franchising deals translate into actual sales. If all these pieces fall into place, NIO could be looking at profitability not just from selling cars, but from becoming a full-scale technology provider in the EV industry. At the end of the day, NIO's story is no longer just about electric vehicles. It's about creating an ecosystem of technology and services that others are willing to pay for. And if that continues, the bullish case for NIO gets stronger with every quarter. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.